Are you tired of giving Uncle Sam more of your hard-earned money than you need to? Today, I'm revealing 5 tax deductions people often miss that could potentially save you thousands of dollars this year. We're diving into home office deductions, business mileage, retirement contributions, HSAs, and education expenses. It's about keeping more of your money where it belongs, in your pocket. So, if you're ready to slash your tax bill, hit that like button to help others find this video, and let's dive right in. Are you paying more taxes than you should? Today, I'm revealing 5 tax deductions you might be missing that could save you thousands this year. Alright, let's kick things off with a deduction for all my fellow entrepreneurs and work-from-home warriors. The home office deduction. If you use a specific area of your home exclusively and regularly for business, you might be able to snag this deduction. We're talking about a portion of your rent or mortgage interest, property taxes, utilities, even your homeowner's insurance. The IRS offers 2 ways to calculate this. The simplified method, which lets you deduct $5 per square foot of your dedicated workspace up to 300 square feet, or the regular method, where you calculate the actual percentage of your home used for business. Keep meticulous records of your expenses though, and make sure your workspace is truly used just for business. Even if you're not self-employed, you might still be eligible for the home office deduction if you're a telecommuter who works from home for an employer's convenience. Taking advantage of the home office deduction can put some serious cash back in your pocket. Next up, let's talk about putting your car to work for you. The business mileage deduction is a fantastic way to offset the costs of using your vehicle for work-related purposes. Each year, the IRS sets a standard mileage rate that you can deduct for every mile you drive for business purposes. We're talking about client meetings, trips to the post office, even driving to a conference. Just remember, commuting to and from your regular workplace doesn't count. The key to maximizing this deduction: meticulous record keeping. Track every single business mile you drive. You can use a mileage logbook or a mileage tracking app to log your trips and categorize them for business or personal use. By diligently tracking your mileage, you could be looking at a significant deduction come tax time. Now, let's talk about planning for the future while saving money in the present. Contributing to retirement accounts like IRAs and 401k isn't just a smart financial move, it's also a fantastic way to lower your taxable income today. Every dollar you contribute to these accounts is a dollar the IRS can't tax you on right now. Plus, the money you contribute grows tax-deferred, meaning you won't pay taxes on it until you withdraw it in retirement. With a traditional IRA, your contributions are often tax-deductible, meaning you can subtract them from your taxable income in the year you make them. When it comes to 401k, if your employer offers a match, it's like getting free money. Contribute at least enough to get the full match. You're not just saving for retirement, you're also giving your current self a nice little tax break. Now let's talk about a powerful tool that can help you tackle those healthcare costs, while also giving you some sweet tax advantages: the Health Savings Account, or HSA. Contributions you make to an HSA are tax deductible, meaning you can lower your taxable income. The money in your HSA grows tax-free, so those investment gains won't be taxed as long as they stay within the account. When you use the money in your HSA to pay for qualified medical expenses, those withdrawals are completely tax-free. To be eligible for an HSA, you need to be enrolled in a high-deductible health plan, or HDHP. If you're eligible for an HSA, it's definitely worth considering. It's like having a secret weapon to combat those rising healthcare costs while also giving your tax bill a nice little trim. Alright, are you ready to invest in yourself and get a tax break at the same time? Education and skill development expenses can often be deducted on your tax return. We're talking about tuition, fees, books, supplies, even travel and transportation expenses related to your education. The education expenses need to be related to maintaining or improving skills required in your current job or for a field you're actively preparing to enter. There are a few different education tax credits and deductions available, each with its own set of eligibility requirements and limitations. The Lifetime Learning Credit, for example, can help offset the cost of up to $10,000 in educational expenses each year. Before you sign up for that next course or conference, make sure you check the IRS guidelines or consult with a tax professional to see which education tax breaks you qualify for. Alright everyone, now you're armed with the knowledge to potentially save thousands on your taxes this year. Just imagine what you could do with all that extra cash. Invest it, pay down debt, treat yourself. The possibilities are endless. By claiming just a few of the deductions we discussed, like the standard deduction, a $5,000 IRA contribution, and a $3,000 HSA contribution, you could potentially lower your taxable income significantly. So are you ready to maximize your deductions and make 2025 your most financially rewarding year yet? Hit that like button if you found this video helpful, subscribe for more money-saving tips.